One of the biggest changes introduced with the pension freedoms in 2015 was the change of the taxation of defined contribution pension death benefits. Having said that, it's important to know that not all pension products will have been updated to offer full flexibility. So always get your specific pension plans checked out. If you want to know how your pension benefits are taxed if you die before or after age 75 and what this means for any lifetime allowance tax charge, listen in. If you die before age 75 and if death benefits are settled within 2 years of your death, which is normally the case, your beneficiaries can receive any benefits free from income tax. It's really important to be aware that death before age 75 with what we call uncrystallised benefits, that's a pension that hasn't been taken at all as yet, is what's known as a benefit crystallisation event, or BCE for short. This means that death benefits are tested against the deceased's lifetime allowance. There are a number of benefit crystallisation events that trigger a testing of your pension against the lifetime allowance, and one of the crucial ones happens at age 75. This is one of the reasons why the rules for how death benefits are paid differ before and after this age. If you have exceeded the lifetime allowance, your beneficiary has the choice of taking any excess above the available lifetime allowance as a lump sum or as an income, subject to the pension provider offering both options. If you do have a choice, for most people from a taxation point of view, it makes sense to opt to take the pension benefits as income via a drawdown plan rather than a lump sum. That's because any lump sum would face the lifetime allowance tax charge of 55%, whereas any income faces the lower lifetime allowance charge of 25%, with no subsequent charge to income tax. When your beneficiary receives your death benefits, these have already been tested against your lifetime allowance, so would not be tested again. This is one of the reasons why beneficiary drawdown plans are kept separate from your own pension plans, so as not to confuse your beneficiary's lifetime allowance with yours. If there is a delay of 2 or more years before death benefits are paid out, then your beneficiary has to pay income tax at their marginal rate on the benefits received. One upside is that there is no lifetime allowance check in that situation, so for some people delaying taking death benefits could be more beneficial. My recommendation would be ask a financial advisor to work out those numbers for you. In reality, most pension providers are keen to pay benefits as soon as possible, and some move benefits into cash when they're informed of a death. So it's not always possible or sensible to delay the payout. If you die after 75, any benefits your beneficiaries receive are taxed at their marginal rate. Death after 75 is not considered a benefit crystallisation event, as any lifetime allowance charge will have been dealt with already at age 75. What's more, there's no 2-year rule on death after 75, as income tax has already been paid on the benefits. Finally, what if you die before 75 and your pension is already in drawdown? Because entering drawdown is considered a benefit crystallisation event, which triggers a lifetime allowance test. If you die when your funds are already in drawdown, there's no further test against the lifetime allowance. It's already happened. That has the benefit of no lifetime allowance test on any growth in your drawdown funds between going into drawdown and your death. This is an incredibly complex topic, and one I suggest that you seek advice from a good independent financial advisor. Thanks for checking out my video. I hope you've enjoyed it. If you have, please press the like button and subscribe, of course, to never miss an episode. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help you live a successful life, and that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to tune into that. I'll put a link in the description below so you can find it, or you can also sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.